If you are someone who invests in the stock market, then one name you would have heard about is ITC. It is one of the biggest and oldest conglomerate of our country. I'm sure many of you would be interested to know if it is worth investing in ITC or not. So in this video, I have done an in-depth analysis of ITC and its business. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. We will start with analyzing the business of ITC, then we will understand the key strength of ITC, then we will discuss the future growth prospect, and finally we will analyze the financials of ITC on various parameters like growth ratio, profitability ratio, etc. And finally, we will do the valuation analysis of ITC to understand if it is worth investing in ITC at current levels or not. We will also try to understand why ITC share is currently trading at much lower valuation as compared to the competitors. But before we proceed, this video is only for long-term investor, not for day traders. Alright, let's get started. ITC was established in 1910 with the name Imperial Tobacco Company of India Limited. Later, it was renamed to ITC Limited in 1974. So ITC started its business almost 111 years ago with tobacco, and it is one of the oldest public listed company in India. Today, ITC is a big conglomerate with presence across many business categories. If you look at the business division of ITC, first division is cigarette. ITC is market leader with almost 75% market share in Indian cigarette sector. This is the biggest contributor in the revenue and profitability of the company. Next business segment is FMCG. ITC has a strong presence in FMCG segment with a huge product portfolio catering to packaged food, personal care and education and stationery. Top brands in FMCG segment include Ashirwad, which is 6,000 crore brand and number one brand in Atta segment. Sunfeast is over 4,000 crore brand and number one in cream biscuit segment. Bingo is 2,700 crore brand and number one in snack food segment. Yippee is 1,300 crore brand and number two in noodles segment. Classmate is 1,400 crore brand and number one in notebooks. Mangaldeep Agarbatti is over 800 crore brand and number two in Agarbatti segment. Some of the other brands of ITC include Savlon, Engage, Fiyama, Vivil, Neem Wash, Be Natural, Minto, Candyman, Peppercraft, etc. FMCG is the fastest growing segment of ITC and the most promising business category. Next business division is hotel. At present, there are 100 plus hotels in 70 cities. Some of the hotels include ITC Grand Bharat in Gurgaon, ITC Grand Chola in Chennai, ITC Maurya in Delhi, ITC Maratha in Mumbai, ITC Royal Bengal in Kolkata and many more. Next is agribusiness. ITC is India's one of the largest agribusiness enterprise with presence across the entire value chain. ITC sources the finest of Indian feed ingredient, food grain, marine product, processed fruits and coffee. Next business segment is paperboard and packaging. ITC's paperboard and specialty paper division is India's largest and most technically advanced and eco-friendly paperboard business catering to a wide spectrum of packaging, graphic, communication, writing, printing and specialty paper requirements. ITC packaging business converts 70,000 tons of paper, paperboard and laminates per annum into a variety of value-added packaging solution for various industries including food and beverage, personal products, cigarette, liquor and consumer goods. ITC has many subsidiaries including ITC Infotech, which is in the business of technology consulting. Now let's try to understand the contribution of each business division of ITC in the revenue and profits of the company. If you look at the revenue breakup for Q3 of FY21, ITC has a total revenue of rupees 13,255 crore. Out of this, cigarette contributed 5,498 crore, that is 41.48%. Please note that the cigarette division revenue has increased 3.5% in Q3 of FY21 as compared to Q3 of FY20. Next contribution is from FMCG business that contribute rupees 3,562 crore. That is 26.87% in total revenue. It has increased 7.5% as compared to Q3 of FY20. Hotel business has a significant impact due to COVID. It suffered a loss of 57.4% in revenue. Agribusiness is the third largest contributor with 18.7% contribution. Its revenue has grown 18.5% as compared to Q3 of last year. Paperboard, paper and packaging contributed 11.15% in total revenue. Clearly, cigarette business is the dominant contributor. However, over the years, the revenue contribution of cigarette segment is declining. If you look at the profit breakup for Q3 of FY21, ITC had a total profit of Rs 4,074 crore. Out of this, cigarette contributed 3,453 crore, that is 84.7%. Clearly, the cigarette business is the biggest contributor in the total profits of the company. However, there is a fall in profit by 8.1% as compared to last year. FMCG business contributed only Rs 207 crore, that is 5% in total profit. But the biggest takeaway is the huge growth of 92.7% in FMCG profits as compared to last year. Clearly, FMCG profits have grown significantly. Hotel business was in loss due to COVID. Agribusiness contributed 4.7% in the total profit. Paperboard, paper and packaging contributed 7% in total profit. So clearly, cigarette is the biggest contributor in the revenue and profits of the company, but FMCG is the fastest growing segment in the company. If we look at the leadership of ITC, Mr. Sanjeev Puri is the chairman and managing director. Mr. Puri is an alumnus of IIT Kanpur and Wharton School of Business. He joined ITC in January 1986, so he is associated with ITC since 35 years now. Clearly a rich experience. Puri also has served as Chief Operating Officer of ITC and prior to that as President of FMCG Business. As of today, ITC has a market cap of more than 2.5 lakh crore. Overall, looking at the company and its product portfolio, brand value and management, I would rate it 10 on 10. If you look at the competitive strength, the first strength of ITC is strong brand name. Today, majority of people in India are aware of many brands of ITC including Ashirwad, Sunfeast, Bingo, Yippee, Savlon, Classmate and many more. It takes a lot of effort to build a brand value and ITC has strong competitive advantage due to this brand value as people recognize and prefer this brand over the competitors. Next strength is innovative and agile business. To stay relevant and sustain for the long term, it is very important for a business to innovate. ITC has been very innovative and agile in terms of business. For example, during COVID lockdown, they partnered with Domino's, Zomato and Swiggy to deliver products to the customer at their doorstep. They also launched ITC Store on Wheels. Next strength is sustainable growth. Friends, the future is not just about growth, but sustainable growth without harming the environment. ITC's one of the biggest strengths is sustainable growth. It is a carbon positive company for 15 years with afforestation. Water positive for 18 years with watershed development. Next strength is strong distribution network. Distribution is the backbone of a FMCG company. Over the past 110 years, ITC has built a very strong distribution network. Today, its products are sold at over 60 lakh retail outlets all over the country. ITC can use this distribution network to sell all its products including the new launches. If you look at the competitors, ITC has strong competition from other FMCG companies. For example, in the personal care category, it has strong competition from HUL, which is the leader in the category. In food business, it has strong competition from Nestle, Britannia, Dabur, Marico, etc. Patanjali is also a strong competitor, but it is not a listed company. Overall, on competitive strength, I would rate ITC 8 on 10. Friends, ITC has a strong focus on the FMCG business. It is in a transformation phase from being a cigarette company to FMCG company. Although it is a long way to go. ITC has launched 100 plus innovative products in the hygiene, health and wellness, natural and convenience category. People are getting more conscious about their health and looking for organic and healthy food. This category would grow in the future. In health and wellness category, ITC has launched Ashirwad Organic Atta and Dal, Be Natural Immunity Soup, Ashirwad Salt and Ashirwad Dairy Products. Convenience food is again growing at a fast rate as people are getting busier in their life and require ready-to-cook instant food. This category would grow even further in the future. ITC has launched various products in this category including Ashirwad on-the-go range of instant food, ITC MasterChef all-purpose gravies and ITC MasterChef bakery range. After COVID, there is more awareness about health and hygiene. ITC has launched many new products in this category including Neem Easy and Neem Wash Dishwash Liquid, Savlon Hexa Soap, Body Wash, Disinfectant Spray, Savlon Mask and Germ Protection Wipes, Vivel Glycerin Neem Oil Soap and Dermafig Biocellulose Face Mask. Not only this, there would be a growing demand for hotels and hospitality segment, agri-products and in packaging business. Overall, ITC has a bright future growth prospect and hence I would rate it 10 on 10. In the last 10 years, ITC revenues have grown from Rs 22,566 crore in March 11 to currently at Rs 48,196 crore at a CAGR of 8%. The profits have grown from Rs 5,000 crore in March 11 to Rs 13,262 crore at a CAGR of 10.2%. Overall, on growth ratio, I would rate it 8 on 10. If you look at the operating profit, it has been consistently above 30%, which is great. The latest operating profit margin is 35%. If you look at the ROE and ROCE, both are well above 20%, which is great. The latest ROE is 22.4% and ROCE is 29.8%. Overall, on profitability, I would rate it 10 on 10. If you look at the debt to equity, ITC's debt to equity has been negligible. Hence, on debt to equity, I would rate it 10 on 10. ITC is a cash-rich company and has huge reserves. Its reserves have increased from 15,716 crore to current level of 57,853 crore. How many companies do you know with such amount of reserves? Very few. If you look at the latest shareholding pattern, 24% stake in ITC is with British tobacco company Tobacco Manufacturer India Limited. 21.65% is with various insurance companies where LIC holds 16.25% share. Financial institution own 8% stake, Indian mutual fund own 9.94% stake and foreign portfolio investor hold 12.96% stake. Friends, if you look at the dividend yield, ITC provides great dividends and it has a dividend yield of almost around 5% at current share price, which is fantastic. So if you invest in ITC at current level, you would get around 5% return on investment in the form of dividend yield, which is over and above the share price hike. Over the years, ITC share price has fallen from the highs of Rs 340 in 2017 to currently at Rs 210. Currently, it is valued at a PE of 19. Now the question is, why ITC share price has fallen to current PE of 19 when other FMCG companies like HUL is commanding a PE of 70, Nestle is commanding a PE of 78 and Britannia is at a PE of 44 and all stocks have given great return. The reason is their cigarette business, which is also known as sin business. Over the last few years, FII has constantly reduced their stake in ITC from 18% in March 18 to currently at 13%. The reason is due to ESG theme, that is environment, social and governance. So of late, there is a new trend of ESG theme where investors want to invest in companies that are compliant with environment, social and governance theme. Although ITC score high on ESG score, it is still a tobacco major with 45% business from tobacco. There is a lot of pressure on tobacco business due to increase in tax as well as people looking at it as sin business. Hence, the share price has fallen. However, ITC is constantly increasing its FMCG business and in the next 3 to 5 years, food and personal care would contribute more in the revenues. Currently, it is investing a lot of money in the FMCG business and it will slowly start giving result in terms of better profitability and slowly ITC would start commanding a higher valuation. Friends, it is a matter of time ITC would have a strong comeback. It is one of the best value stock available at current price. It might not give quick return in the short term, but certainly a great buy for long term. And please note that you can't expect multi-bagger return from ITC, but you can surely expect a decent return year on year. And the downward risk is very low. Hence, those who are looking to invest for the next 5 to 10 years should have ITC in their portfolio. So this is my analysis on ITC. I hope you have enjoyed the analysis. Have you invested in ITC? Let me know in the comments. And if you want to learn how to do such analysis, I have curated a complete course on money management. You can get the course link in the description. I will see you with another video. Till then, take care.